Welcome back. Well, the market continues to struggle around, but we're not really caving in, and that's the good story. So it's been very steady since the time the three of us actually came into the studios. Still a cut of around 40 points. Nilesh Shetty, portfolio manager at Quantum Advisors, is with us now to discuss market fundamentals. Nilesh, good afternoon, good morning, almost afternoon to you. So it's been, quite a double whammy of sorts, budget, and then, of course, all the noise around the Adani group of stocks. What have you made of it, first of all? And when do you see the market perhaps moving beyond some of these big noisy events?
Yeah, I mean, we've always had a corporate governance filter in our investment basket. I think some of the investors who are trying to invest over long term in India sometimes forget long-term risk of allocating without focusing on corporate governance. So in that sense, at least our portfolio has always been built assuming corporate governance is the first filter that companies have to sort of pass through. And some of these large groups in India, which in fact are very large parts of the index, have never been part of our portfolio. So I think just near term, sometimes we have to bear the brunt of underperformance because of that. But over the long term, we've always seen those risks come out in the open. So again, it's something which has not bothered us that much. A lot of the information that is out there has been in the public domain. So we've always built a portfolio X of companies where we felt corporate governance was an issue. Again, on the environment, again, we don't think on the ground things are not that bad. I mean, there's a lot of negative news flow in India right now because of news flow that's coming out on certain groups. But when you go on the ground, things are very positive. It's actually been, most of the companies are very positive on demand, and you're not seeing any kind of slowdown. There might be some impact of large bases as last year numbers are stronger and this year you have to report on those strong numbers. But apart from that, the environment is very, very different to what it was, say, 3 years ago. And most of the companies are looking at very strong demand and looking at expansion to meet that strong demand. So I think we think a capex upcycle is due. We think the budget, given that this is a large budget before you head into national election next year, which is the last full budget, it is unlikely to be not an expansionist budget. We expect the government to spend quite aggressively in this budget. And given those catalysts, it is unlikely to, at least for us, for the earnings to not show traction over this year and next year. So again, we remain fairly constructive on Indian markets. We think there is fairly decent upside in select sectors. And if you are selective in how you build your portfolio, you will make decent returns over the next 2-3 years.
All right. Nilesh, good morning and thanks for joining us. But, at a time when we do have at least the budget lined up, how would you approach it right now? Do you look at some of the standard, themes that we tend to discuss before the budget, the infra plays, the construction companies? Do you think those are good bets to look at?
Yeah, I mean, we are not tactical allocators because our investment horizons are very long. We don't try and play the budget. But yes, there are large pockets of opportunity in the market where valuations have come off. And some of these were actually growth sectors, say, 2 years ago. So we are actually find opportunities in the consumer discretionary space, especially two-wheelers. We have a large allocation there. We have allocation to a lot of the savings-linked themes now, say the asset management companies, the broking companies, the insurance companies, which were priced to perfection, say, 2 years ago, but have seen significant de-rating over the last 2 years. Again, our numbers are not materially different from the street, just that we were willing to pay a lower multiple, which these companies are now trading at. So I think there is opportunity there if you want to build up a portfolio for the next 3-4 years. I think some of these names are trading at very attractive valuations with decent growth traction over the next 3-4 years.
Nilesh, any thoughts on Bajaj Finance? This is a company which was seeing high growth a couple of years back. The stock has seen a fair amount of correction from peak levels. It's down 25% from its 52-week high levels. The company does intend to focus on other avenues, other products like car loans, CV loans, microfinance, agri loans to start, getting back to its long-term growth aspiration of 24-25%. Is this a stock that you would bet on? And your thoughts on their plans?
Yeah, I may not be able to comment on individual stocks, but again, it's a value portfolio, focus on value side. Some of these NBFCs which trade at very high multiples, again, assuming very high growth rates to be sustaining over the next 5, 10, 15 years and priced for that. Again, that is not the style that we approach. I think people generally tend to get disappointed because these stocks tend to mean revert to industry averages far more quickly than what people think. And paying very high aggressive multiples for such kind of businesses has not worked out historically. So again, if it comes at a valuation that we are comfortable with, a great business to own. I think it's a fantastic story that they've built. But for us, again, that these kind of businesses trade at such high multiples that in a value portfolios never made sense.
Nilesh, finally, then, how do you describe value, or what do you call value in a market like this? And I'm just wondering if IT at all fits the bill. It was the underperformer of 2022, and world over, there's a big move into IT, back into technology. What's your call?
That's correct. So at the first half of last year, we trimmed a lot of IT stocks that we had because valuations were sort of factoring this case scenario. After the correction that happened in the second half of last year and even sort of late in last year, we started increasing our weight in IT. Again, long-term growth rates are not materially different. It's just that what is the kind of valuation you want to pay for these businesses? We think there is still long headway for growth at a normalized growth level, not the high growth that we saw from 2020 to 22. But even if you factor a lower growth rate, the multiples that they were trading at, say, in the last quarter of last year, was fairly attractive. For us, sort of the downside risk was a lot limited from that point on. And we think if the numbers come through, they will give you fairly decent upside. So yes, we have increased weight in IT.
Have increased weight in IT. Nilesh, it was a pleasure speaking to you, and we'll hope to connect soon once again. Thanks for taking out the time and speaking to us today. But with that, we're going to get into a short break. You don't go anywhere. There's lots more market action coming up for you in just a bit.